Trolls live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it's a start of a brand new week, and after we did see Friday's sell-off on Nifty, and indeed the last week has been quite directionless for the markets, it looks like today also we are headed for another negative start on an index level. But yes, the next level will definitely hinge on how the street reacts to the results that was given out by the heavyweights, be it your Reliance Industries, HDFC Bank and even ICICI Bank. So individual stock-specific action will be watched out in today's trading session. Now, barring how the earnings season has been panning out, there's no breather when it comes to US President Donald Trump. I mean, first this year we did see the Venezuelan intention, and now the Trump's next plan of buying Greenland, and as a result of which he's announced a fresh round of tariffs, that is about 10% tariffs on 8 European nations. Now, this includes countries like UK, France and even Denmark as of now, and he further says that these tariffs would increase from 10% to 25% by June 1st if a deal is not reached for a total and complete purchase of Greenland by the US. So yes, currently the 10% tariffs that he has announced will be effective from February 1st onwards, and later on he plans to increase it to by about 25% if the deal is not reached by June 1st itself. So, the tariff tantrum continues from the US president. But yes, the European leaders have said that it's only for Denmark and Greenland to decide on the matters which is concerning its territory. And Denmark has said that this week it will be increasing its military presence in Greenland by cooperating with its allies. So yes, it's an interesting development to track. We'll watch out how this development unfolds in the upcoming weeks itself. But so far as of now, the global picture remains quite perturbed by it. If you look at the Wall Street on Friday, it did end the session on a lower note. We did see US 10-year yields have also inched up near to its 200 DMA levels, and even the Asia-Pacific markets that have started the day quite on a weakish note. But yes, we'll be watching out for China's fourth quarter GDP print and even the December retail sales figures that could further set the tone of the trade. But for now, all in all, it looks like the sentiment remains quite weak for the markets. But we'll understand how all of these cues will impact the markets, what your trade position should be like with our experts, which is lined up later in the show. Also, keep posting your stock-related individual queries on our live feed, and we'll address them shortly too. But for now, let's quickly move on and take a quick check of the top headlines. US features under pressure after President Donald Trump announces 10% tariffs on 8 European countries for opposing Trump's Greenland plan. European Union wants a downward spiral and is also set to halt trade deal with the US over Trump's new tariff threats. Asian markets open lower, tracking developments between US and European nations. Meanwhile, the GIFT Nifty suggesting a gap-down start for the Indian markets. Gold and silver prices have also retreated after hitting fresh record highs. World Economic Forum Annual Summit gets underway in Davos. All eyes are on the US President Donald Trump, who will be leading the largest ever delegation in the World Economic Forum, even as the escalation between global trading partners continue. Nifty's heavyweight Reliance Industries report a strong December quarter. Consolidated profit and revenue sees an uptick led by digital and O2C segments. EBITDA has hit a 7-quarter high. Chairman and MD Mukesh Ambani says FY26 reflects consistent financial delivery across businesses. And banking major HDFC Bank reports a good set of third quarter numbers in line with the street estimates. Profit sees 11% uptick, while asset quality remains stable. On the other hand, ICICI Bank net profit have fallen short of estimates as the Reserve Bank of India has directed bank of making a standard asset provision of 1,200 crore rupees. The board has also reapproved appointment of Sandeep Bakshi as the MD and CEO for another 2 years. So, if you look at the pre-open rates, definitely it looks like another negative start for the markets. But for the last session, Nifty did snap its 2-day losing streak. It ended marginally higher and emerged. And if you could see, 25,900 levels is where the selling had emerged. But yes, the IT stocks led, given that Infosys Q3 had lifted sector sentiment, and the banking pack had also shown a bit of a resilience. However, pharma and metals, they remained under the pressure, and the broader end of the markets ended on a mixed note, given that midcaps edged up while the small caps slipped in the last session. But yes, for the overall week for the Nifty, that ended on a flattish note, a little bit marginally higher, but still flat with a positive bias. But yes, the mid caps outperformed on a weekly basis, and even the small caps have outperformed the benchmarks on a weekly basis. From a sectoral front, what stood out was your Nifty metal pack, and even for the Nifty PSU banks, because both of them zoomed by about 5% in the last week itself. IT also remained one of the top sectoral gainers in the last week itself. But what did not do well in the last week from a sectoral point of view, that was your pharma, realty and auto. All of these three sectors remained under pressure for the last week itself. Going ahead into this week, we'll be watching out for the December quarter results. Stock-specific action will continue, like I was talking about earlier, and further global developments. For instance, your tariff-related issues, and of course, your the continuous plans of buying Greenland as of now is further to shape the action as well. We'll be having certain, companies which will be reporting the third quarter results this week. That includes the likes of IndiGo, Kotak Mahindra Bank and Eternal, Ultratech Cement, also one of the nifty weights that will be reporting its third quarter results itself. But coming to the cash flows position of where we stand, FIIs, they have sold stocks which was worth about 3,400 crore rupees in the cash markets. DIIs have bought stocks which was worth about 3,000 crore rupees in the cash markets. Option Qs data, if you look at the Nifty put call ratio, that has dropped further to about 0.76 from 0.81 levels in the previous session, and the stock that continues to be a part of the F&O band, that includes your SAIL and Sammaan Capital. So yes, all in all, that is the cue that we need to start off the day with. But for now, if you look at Sensex down by about 75 points, Nifty has also continues to remain below that 25,700 mark as of now. But let's quickly get on board with the technical expert of the show. Joining me is Hemen Kapadia, Technical Associate of DRChoksey Finservv. Hemen, good morning. I mean, Nifty was largely flat last week and remains below 25,700 levels. So what are the next levels we can track from here on, and how does this week look like?
A very good morning to you, Lovisha. Thank you for having me on the show. It's always a pleasure. As far as the Nifty levels are concerned, we were in a range between 25,700 and 26,300 on the upside. Now, that range has been broken, though it's a bounce back. Levels now on the upside include 25,669. 25,900, 26,104, and the final headache, I would say, is 26,277. Till we don't overcome that, I don't think anything is happening as far as the Nifty is concerned. Support comes in at 25,446, 25,212, 25,002. We've seen multiple weeks of a sideways movement, Lovisha, and then we've seen the downward breakdown coming in. A close below 25,446, I think, is going to increase the pain. So nothing looks particularly interesting. I think you already mentioned IT as a sector looks good. The metal rally continues, but beyond that, and PSU banks, nothing else seems hunky-dory, and markets are full of trepidation on tenterhooks. So I don't know if a pre-budget rally comes in or not, but things are not looking very pretty now.
Okay, all right. Something that we need to watch out for. But yes, Hemen, from a levels perspective, what about the Bank Nifty? Now that we have results out from some major private lenders, HDFC Bank and ICICI Bank reported results over the weekend.
Funny thing is, Lavisha, the Bank Nifty is showing resilience in the sense we look technically better. We remain in a medium-term uptrend. And after almost 6 to 7 weeks of a sideways movement, we look like going up. The open interest as far as the Bank Nifty is concerned last weekend has gone up. In fact, on the last trading session on Friday itself, the OI as far as the Bank Nifty is concerned went up by 5%. So it's a completely contrarian thing. Nifty looks weak, Bank Nifty looks better. Having said that, after 7 weeks of a sideways movement, Lavisha, we need a close above 60,300, 60300. We need to close above this. That happens, well, contrary to what it would feel. I mean, it would constitute an upward breakout. So further upside would seem interesting. PSU banks are looking better though, while HDFC and Kotak don't look that good. It's Axis Bank that looks a bit better.
Okay, all right. 60,300 is something that we need to sustain as of now. From a Bank Nifty perspective, and PSU banks are standing out among the private lenders. But yes, Hemen, you talked about Nifty IT remains better placed and one of the top sectoral performers also last session itself. How do you see the structure to pan out over the medium term? And of course, anything that you're liking from the space from a stock perspective?
Okay. As far as the Nifty IT is concerned, Lavisha, 1, 2, 3, 4, 5, 6, 7. This is the eighth week. If you look at the range, it's 37,500, the Nifty IT index, 37,500 on the downside and 39,500 on the upside. So it's roughly a 2,000 point range, Lavisha. And now things are beginning to look better. So a close up of 39,500 would mean a breakout and a continuation of its intermediate uptrend. While even the bigger picture, the longer term charts are also beginning to look a bit better. Stocks which look good on the IT point of view, I think Infosys seems to be one of the better looking stocks. We've come to its earlier swing high at around 1592. So this level needs to get taken out, but we seem comfortably placed for the 55-day exponential moving average, 55-week exponential moving average. The mechanical indicators are in a buying mode. So my pick probably would be Infosys, which looks better than many of the other mainline IT stocks. Lavisha.
Okay, all right. Infosys is better placed as of now. But what about the metals, Hemen? I mean, despite some pressure in the last session, it was still up by about 5% last week itself. Can we expect the uptrend to continue over the near term?
I think so, but now as we go higher, I think we are okay. The Nifty Metal Index is at an all-time high. We have listed it history from some end 2004, Lavisha. But I think we are going to get into slippery ground because we're getting a bit overbought. But as of now, as we speak on a Monday morning in a fresh new week, Lavisha, the move is on short term, medium term, long term. So further upside, we're at 11,603 as far as the Nifty Metal Index is concerned. A close of 11,700 would mean that the move continues. But like I said, as it goes higher, one need to be slightly cautious. It's getting a bit overbought. So maybe a little bit of profit booking. A short is not suggested though, but some profit booking can be considered.
All right, some profit booking can be considered from the metals pack. Of course, we did see that last week Nifty Metal was one of the top sectoral performers. We'll watch out how today's session also pan out for the rest of the sectoral indices. But yes, the first rates that's coming on your screen from the Nifty 50 front. If you look at Nifty, it's opened below that 25,600 mark itself. 100 points downtake coming in for the Nifty 50 and about 0.5% cut coming in on the benchmark index itself. So, of course, it's quite a bit of a negative start from a Nifty 50 perspective and, of course, from a headline index perspective. Sensex also seeing a cut of about 400 points. 0.5% decline coming in from the Sensex itself. Bank Nifty also has opened with about 150 points decline, nearly 0.3% cut. And Nifty Midcap Index also showcasing a decline of about nearly 200 points and nearly 250 points itself, nearly a 0.6% decline, more than 0.5% cut coming in from the Nifty Midcap Index itself. But yes, both the Midcap and Small Cap Index has been showing signs of weakness, and India VIX has inched up to about near 12 odd levels. So about 4% gains, 4% uptick that is coming in from an India VIX front. From a sectoral perspective, Nifty FMCG and Nifty Metal has opened with a positive bias, but majority of the sectoral indices have opened in the negative trajectory. Nifty Realty has showcasing a decline of about nearly 1%. Nifty Pharma Index also nearly a decline of about nearly 1% itself. Autos, metals, autos, pharma, realty, once again, one of the top sectoral drags as of now. If you look at the other sectoral pockets, for instance, here Nifty Private Bank, 0.1% decline. Nifty Bank Index also showcasing a decline of about nearly 0.3% itself. So all in all, it looks like, it's a very weakish setup for the markets as of now because majority of the sectoral indices have opened in the negative trajectory. But yes, let's take a look at how the Nifty 50 gainers and losers look like. On the gainers front, you can see IndiGo has been doing well. 2.5% gains coming in. Now, remember that the DGCI has imposed a penalty of about 22 crore rupees on IndiGo, and we did see a brokerage note that came out this morning where they believe that it would not see any near-term pressure going ahead, and that's why you can see that the stock has been cheering in today's trading session, nearly 3% gains coming in for there. Tech Mahindra also on the back of its third quarter results, 2.5% gains coming in from Tech Mahindra. Axis Bank also doing well, 1.5% gains coming in for there. HUL, Kotak Mahindra Bank ahead of its third quarter results this week, doing well with about 1% gains. Shriram Finance and HDFC Life also remain one of the top Nifty gainers. But yes, sir, what is not doing well, that is your Wipro, seeing a sharp decline of about 9% itself on the back of its soft December quarter results. So we'll understand how Wipro also stands out and what the brokerages have been saying. ICICI Bank also seeing a decline of about 2% itself. We did see that the profit has fallen short of the street estimates, given that the RBI had mandated the lender to make extra provisions for meeting its PSL, that's your priority sector lending norms. So as a result of which the street has been pricing in the negative reaction, 2% decline coming in for the private lender. Tata Motors passenger vehicle also seeing a decline of about nearly 2%. Reliance Industries not reacting well after its third quarter results. Sun Pharma, Cipla, L&T, some of the other losers on the Nifty 50 front. But yes, let's talk about Reliance Industries, which is seeing a bit of a cool off once again today. We did see from a third quarter numbers, consolidated revenue had risen by about 10% on a year-on-year basis. Profit was marginally up by about 2% on a year-on-year basis, but EBITDA was where the spotlight was, because that had hit a 7-quarter high. And two main segments that drove the performance was your digital and O2C. Now, what the brokerages have been saying, CLSA gave out an outperform call and called the Geo, FMCG and M-Media businesses as robust. And even Citi has shared a buy rating, saying that the recent downside the stock has experienced limits any further correction. But yes, Hemen, if you look at the stock today, once again, a percent fall for Reliance Industries. It has been exhibiting certain weakness. But do you believe, we can see the worst of the fall going ahead, or is the downside limited from here on?
Oh, I think I'll answer that question, Lovisha, with a yes and no. Downside does appear limited. There is decent, if not good, support at 1420. But if you, and yes, we've come off from 1610 plus, Lovisha, over the last just 1 week and more. So oversold, sharp downside, uh, support at lower levels. A bounce is around the corner. But if I look at the slightly bigger picture, Lovisha, there is signs for some concern. The Reliance has given a downward bar reversal 2 weeks back. Technically, that is not a good sign, and it's not even tried to cover up half of that. So, okay, oversold bounce is around the corner. A bounce would come in this week. I'd say high probability, but it's going to be a recovery, not a rally, because the previous high, which was around 1609, and it came in around in July 24, Lavisha. Reliance walked into resistance exactly at that point, and we've fallen sharply. A bit too much for comfort. So I'd say a recovery, but this is going to take some time to play out. So I wouldn't get very excited even if it bounces 100 points from here, Lavisha.
Okay, all right. That's the view coming in from Reliance Industries. 1% decline that's coming in from the index heavyweight. And it's also contributing to the weakness for the index overall itself. But yes, another stock which has been reeling under the pressure, that's your Wipro, seeing a decline of about 9% itself, where we did see that the consolidated net profit had fallen by about 4% on a sequential basis. Revenue had, however, grown by about 5% on a Y-on-Y basis in the third quarter itself. Hemen, coming to you, how does the chart look like from the medium-term perspective? Because we are seeing a sharp slide today, and even the brokerages remain quite unenthusiastic after the December quarter performance for Wipro.
Oh, it's a very interesting scenario, Lavisha, if you look at the charts. On the monthly charts, Wipro has been moving flat and sideways for almost 11 months now. The range is between 235 on the downside and 273 on the upside. So after 11 months, and we get results like these, there's a big bearish gap today, which is formed, Lavisha, which is not a good sign, which will provide resistance when it goes up. Uh, so, but having said that, after 11 months, we need to break this 235 level, or we need to cross 273, which obviously right now doesn't seem to be a probable scenario. But below 235 problems. But till then, after 11 months, I think it's within the range, it's within the box, I'd say. So till there's a breakdown, I wouldn't take this very seriously. I know if the stock tanks 9%, it's probably not the right thing to say. But if it's not out of the range, I'd say maybe there is hope and the support plays its part, Lavisha.
Okay, all right. Wipro seeing a sharp decline today. But yes, what seems to be doing well from the IT pack, that's your Tech Mahindra. Nearly 3% gains coming in for this particular counter, given that it delivered a better than expected third quarter performance, which was led by its communications and telecom business itself and the manufacturing segment for Tech Mahindra. Hemen, coming to you for Tech Mahindra, of course, from the past, not just today, but from the past two trading sessions, the stock has been inching upwards. We have seen about 9% gains in just the past two sessions itself. So how does the near-term trajectory look like, and can we see further run-up ahead?
Absolutely, Lovisha, I agree with what you said. We can see further upside coming in. There is resistance at 1750, but not fair to compare what Wipro is in the doldrums while Tech Mahindra is training at the leash, so to speak. It is going to make a sincere attempt at giving an upward breakout from this range. But yeah, short term, medium term, the stock remains unequivocally bullish, and even the bigger picture, the long term charts also are showing positivity. Above 1750 looks good as of now. Very clear intermediate uptrend in place. Further upside, yes, looks like it.
Okay, all right. That's the view coming in for Tech Mahindra itself. All right, 3%, nearly 4% gains coming in for this IT counter. But yes, let's shift focus and take some of our viewer queries that is dropping on our live feed. The first query coming in from Anil, he's asking the view on railway stocks and whether it's the right time to buy, like Jupiter Wagons, Texmaco Rail, Titagar Wagons, etc., ahead of the union budget. What's your view, Hemen, for all of the railway counters? I mean, you were saying that earlier that the pre-budget rally looks like quite impossible as of now, the potential rally. But for the railway counters, any thoughts on these particular counters?
Lavisha, Jupiter wagon seems a better. Titagar wagon hasn't done anything. It's like earlier times we used to have fertilizer stocks running up before the budget. This time it probably would be railway stocks. Like I said, it seems a bit difficult for the pre-budget rally to play out. I wouldn't rule it out completely, but seems dicey. But yes, if I were to compare apples and oranges, Jupiter does look better than a Titagar wagons. So I wouldn't say it's very exciting. But yeah, if you want to play a punt, I think it makes sense. While Texmac or Rail is showing no signs of life. It's just Jupiter which is showing technical green shoots. But once again, you need to keep the recent swing low as your stop loss because markets aren't very copacetic for anything particularly. Like it's metal, IT, and little bit of PSU bank. So one needs to be careful, tread lightly because the setup is taking a hit. So whatever happens, you need to keep that at the back of your mind. The Nifty hasn't broken out after multiple attempts. So keep that in mind.
Okay, all right. That's the view for the railway stocks ahead of the budget, and of course, in general, the market sentiment itself. But yes, let's move on. We have another viewer query by Dr. Naidu. He's asking the view on what are the prospects of IRCTC for the long term itself. What's your view, Hemen? Of course, the stock has been spiraling downwards, and recently also the stock hit about a fresh 52-week low. Can we see a further fall ahead, or is there any reprieve or respite on the horizon?
Uh, Unfortunately I don't have any good news to give him. Ever since we peaked at 1279, this is obviously split from 10 to 2 in October 21, Lavisha. So it's been almost 4.5, 5 years now. IRCTC has done nothing. And as of now, the series of progressively lower tops and bottom continue, which basically means that we are weak and we are corrective. So even now, like you said, we posted a fresh 1 year low and support comes in at 560. Short term, an oversold situation has developed on the daily chart. So don't be surprised if we see a 30-point bounce in this week or the next, probably in the next 12 to 15 trading sessions. But the setup remains insipid, uninspiring, and distinctly weak. So further downside, yes, let's see whether 560 holds or no. There's a longer term view, short term bounces around the corner.
Okay, all right. That's the view coming in for IRCTC. But we have another query by Satya. He's asking the view on ICICI Bank and what are the levels to add for the long-term horizon. Of course, we've seen a disappointing December quarter. The profit has fallen by about 4% on a year-on-year basis, given that the lender had seen some extra provisioning after the RBI mandated to meet its priority sector lender norms itself. Brokerages have largely remained positive despite the weakness that was observed in the December quarter. Jefferies have shared a buy call, calling that while the asset quality remains quite stable, the unsecured retail loans remain soft. Now, what the brokerages have also appreciated is the extension of Sandeep Bakshi's tenure because it removes a regulatory overhang for the time being. Hemen, coming to you, the stock has been sustaining. The stock did see a recent breakout, but then we're seeing a sharp fall after that. So, what are the next levels? And of course, from a levels perspective, he's asking what levels would you suggest to add?
See, like you said, the breakout almost happened and then fizzled out. On the upside, the levels to watch are 1444 and 1500. I know that's a far cry currently. So downside, the supports come in at 1340, 1320, and the major support comes in at 1280. I don't think you should be in a rush to buy this right now. Just wait a bit. Maybe there's a knee-jerk reaction to the results. So I think he should spread his purchases. It doesn't look exactly convincing on the weekly chart, Lovisha. But like I said, yeah, 13, 1340, 1320 and 1280, three levels where he can spread his purchases and buy at these levels. These are support levels which he can use as buy levels. But I'd say maybe he can call in and review the situation after a few weeks because not looking very convincing. The bigger picture still remains sanguine and positive. The weekly picture seems, obviously, due to the results, the weekly picture has taken a hit.
Okay, all right. Weekly picture remains a little subdued for now. So yes, ICICI Bank, that's the view. But yes, let's move on with another viewer query. We have Naveen, who's been asking the view on Hindalco and what levels he's been asking for the near term itself. Hemen, coming to you, of course, the metal pack in general has seen quite a bit of a stellar rally, and you have been also quite positive on the entire Nifty metal index itself. But yes, from an individual perspective for Hindalco, it's seen a good bit of a rally, even in the past 1 month, 9% gains. Can we see a bit of a consolidation going ahead?
Absolutely, Lovisha. You took the words right out of my mouth. If there is an impending consolidation, 970 needs to get taken out. I don't think that's happening in a jiffy. So near-term pressure, yes. But if you look at the other side, stock is in a medium and long-term uptrend very clearly, has been for the last 6 years and counting. So safely ensconced in a longer-term uptrend. If I were to take a 1.5 year, 2 year view, I know metals are basically cyclical stocks, but if I were to take a slightly longer-term point of view, this stock is probably going to go to 1100 and 1200, but that's a long-term point of view. Near-term, resistance, yes. Consolidation, yes. Pressure, yes. 970 needs to get taken out for a further upside. Support comes in just below 900.
Okay, all right. Support comes in at 900 for Hindalco. Right, let's shift focus and talk about another viewer query. We have Lunath, who's been asking the view on Interglobe Aviation and whether it's a right time to buy at the current levels. Of course, today the stock has been doing quite well with about 3% gains itself. But I mean, from a long-term and of course a medium-term perspective, would you suggest a buy for this particular price point?
Oh, if you want to have a short-term trade, Lavisha, it makes sense to take a buy call with yesterday's low as a stop loss at 4700. But if you have a slightly longer-term point of view, the stock is looking heavy, distinctly corrective, and the longer-term mechanical indicators have given a crossover sell. Simply, succinctly put, it does not augur too well for the stock. So I'd say don't be in a rush. Wait for some time. Let for stability to come in and for a technical turnaround. You can maybe buy 50 rupees later, but wait for a confirmation. Currently, the longer term charts seem to look very clearly corrective. Shorter term bounce coming in. 5200 seems like a level not easily taken out. If it does, it would be a unpleasant surprise. Wait, and if you want to buy 1/5 now, you can buy the rest later. Things don't look very convincing. Giving a buy call at this point in time, Lavish.
All right, that's the view for Interglobe Aviation. Not very convincing at this point of time for the airline operator. But yes, let's move on and talk about another viewer query. We have Shweta Naidu who's been asking the view on Lemon Tree because she's bought the stock at about 163 rupees and she's asking what should be done. Should she average losses? Should she average or book losses or hold at this current price point? Hemen, what's your view? Of course, the stock has been on a negative trend. And from her current buying price, she's seeing a fall of about 15% itself to about nearly 140 odd rupees. What's your suggestion? Should she hold or book some losses at the current price level?
She'll have to be patient. One needs to keep in mind this has been a 6-year up move, Lovisha. So please wait for the laws of gravity to catch up. I mean, you can't run 2 marathons in a row. So it's had a brilliant run. No doubt, the stock goes up from 14 rupees to 180. That's super phenomenal multi-bagger. But the multi-bagger has entered a correction of a greater degree. Simply put, the long-term chart seem to indicate clear weakness. I could take it as a correction because from the way it has moved. So I wouldn't be very happy holding this. You want to hold it, you have to have a longer term time frame. At least 2 years? And if you don't have the patience for that, it's a sell on bounce because this correction, I believe, could take some time to play out. And if it's had a 6-year up move, Lovisha, I don't think there's going to be a major turnaround in a jiffy. Give it some time. In technical parlance, you have a time retracement, you have a price retracement. The time retracement, I believe, could be a bit more significant than expected.
Okay, all right. A little bit patience that we need to warrant on Lemon Tree Hotels. Today also the stock is seeing a little bit of a weakness, about 2% fall. But yes, let's move on to the next viewer query. We have Geetu Sandesh who's been asking the view on Apollo Hospitals, and is it worth to hold the stock for a long-term horizon or should she shift to another sector? If so, can you suggest any one particular? Hemen, what's your view? I mean, the stock has been pretty sideways. But do you expect the stock to perform well in the near term, or how does it look like?
Not looking once again very positive, Lovisha. Maybe it sounds like repetition, but it's 8-year up move, Lovisha, that we are correcting. So we've slipped into a correction without a doubt. 6,800 is make or break on the monthly charts. Currently, we've fallen from 8,100 to 6,900. A bounce is probably what we're seeing, but above 7,500, it's going to be skating on thin ice. So I would say you could probably hold on from a longer term point of view and be patient. Otherwise, at least in the medium term, there don't seem to be any technical positive points that I can point out.
Okay, all right. That's the view for Apollo Hospitals. Nearly 0.5% cut coming in from there itself. But yes, let's move on and talk about another viewer query. We have Karan Ahuja, who's been asking the view on Varun Beverages because he's bought the stock at about 500 odd levels, and he's asking whether he should hold or sell at the current price point. What's your view? Hemen, of course, the stock has been sideways since his buying price, but in the past 1 month, we've seen that the stock has seen a little bit of a buying interest. Can we expect further upside ahead for Varun Beverages?
Well, the picture is a bit mixed, Lovisha. Short-term corrective, long-term corrective, medium-term positive. I hope he doesn't get confused because I am. But anyway, on a serious note, downside does appear limited. We've had a phenomenal move. We've been corrective for almost 1.5 years now, Lovisha. So we are in a base formation. The base is roughly between 440 on the downside and 520 on the upside. There are medium-term positives. Short-term, it looks just a bit overbought, but above 520 further upside seems possible. So despite the move, it has had a very strong move, Lovisha, over the last 9 years or so, but the correction hasn't been deep. So I'd say the undercurrent is strong. As of now, it seems okay. Further upside, at least from a medium-term point of view, cannot be rolled out, notwithstanding a short-term correction, which we are probably undergoing as of now.
Okay, all right. That's the view for Varun Beverages. We'll track how the stock behaves in the upcoming sessions. But let's talk about HDFC Bank. After a small fall that we saw in the initial early trade, the stock has recovered and it's turned flat by about 0.3% itself. From a numbers perspective, HDFC Bank did fare well. Profit had risen by about 11.5% on a year-on-year basis. Net interest income had risen by about 7% on a year-on-year basis itself. And brokerages have largely remained positive on their heavyweight. If you look at CLSA, they've given out an outperform call on the counter. They believe that the NIM has stood out for HDFC Bank, given that it has expanded by about 8% on a sequential, 8 basis points on a sequential basis itself due to the lower deposit cuts, costs and CRR cut benefit. Even Bernstein has given out an outperform call on HDFC Bank. Jefferies has given out a buy call, however, saying that the deposit growth pickup is crucial for LDR reduction and re-rating itself going ahead. But yes, Hemen, coming to you, of course, the stock had seen quite a bit of a fall in the recent days itself. But right now, the stock has turned a little bit flattish, but with a positive bias. What lies ahead? And of course, on the levels front, where do you see HDFC Bank headed?
Technical parameters don't look very positive, Lovisha. We spent 8 months moving sideways, 940, 1019, and we've seen a breakdown from there. It would be slightly misplaced to take this very seriously now because one, it's a monthly chart. Two, we are midway through the month. End of the month, we come back and close up on 940. That means things are, the status quo would be restored. But if we don't close up on 940 at the end of the month, things are not looking very good. Okay, taking a slightly short-term view, a bounce is once again down the corner, 1006 to 920. In just 2 weeks, require the recovery, but the setup has taken a hit. So give this correction some time to play out. And somehow if 940 is reclaimed by the end of the month, I think then that would be a technical green shoot, Lovisha.
Okay, all right. That's the view for HDFC Bank. The technical parameters for the time being looks weakish as of now. All right, Hemen, just one last question before we let you go. What are the top picks at this hour? We are into the earnings season as of now, but anything that you're finding attractive from the current levels?
Okay, I like Colgate. One, it's a defensive. Two, it's oversold. Three, downside appears limited. Four, it formed a base, and and there is positive divergence, oscillate across over buys. So Colgate is a buy at around 2100, stop loss 2050, target 2200. I have a sell call on Polycab, Lovisha. The stock is not looking good. Having said that, we've seen a 7% fall last week, so it's a conditional buy call. One can sell Polycab at 7400, stop loss 7650, target of 6900. It's had a phenomenal move. Stock doesn't look too good. We are entering a correction.
Okay, all right. Those are the two stocks, Polycab and Colgate for now. All right, with that, we have to let you go, Hemen. But thank you so much for your time and joining us.
For having me.
All right, let's take a quick check of the markets before we move on to our next guest of the show. Of course, we've seen that both the headline indices have seen quite a bit of a fall. Sensex has been down by about nearly 500 points. Nifty is also down below that 25,600 odd levels. Both of the indices are seeing a fall of about nearly 0.5% itself. If you look at the advanced decline ratio, that definitely reflects that the markets have clearly been favoring the declines as of now. 1:2, that is where the advanced decline ratio stands as of now. And India Wix has spiked up to about 12 odd levels with about 5% uptick itself. So yes, volatility and nervousness has clearly been imminent in the markets. And if you look at from a sectoral point of view, barring Nifty, FMCG, which is marginally higher as of now, but other than that, all of the sectoral indices have been reeling under pressure. You look at Nifty Metals, Pharma, Realty, Energy, or even Bank Nifty index for that matter, all of them have been showing signs of weakness as of now. So yes, all in all, it's looks like it's a very weakish start for the markets as of now. But yes, sir, to understand and talk more about markets and where it's headed, let's move on to our next guest of the show. We have Vipul Bhowar, Senior Director, Head of Equities at Waterfield Advisors, joining us. Vipul, good morning. Of course, markets remain clearly directionless. We have early set of results which is coming in. How are you seeing this? And of course, given that the tariff tantrums continue on the back of purchasing Greenland by the US, it looks like, the markets have been absolutely nervous as of now. So, I mean, what would you make sense of this initial reading of 2026 and how we have panned out so far?
So, thanks. Morning, everyone. I think the result season has just started. I mean, only I would say 10% of all the top 500 companies have reported earnings. And one observation we are seeing is that there is signs of a top line growth. So in the last whole calendar year, the top line growth was actually not growing. And although there was a profitability growth, mostly was all the reason because of, I would say, consolidation or cutting down cost. Uh, this is the first sign. I'm not concluding on the result season, but this is the first sign where we are seeing some sort of a top line recovery. That is one positive to start with. Uh, of course, global tariffs and the conclusion of tariff is always. I think this is going to be a conversation all throughout this year, and it will be very difficult to come to a stand as to when this concludes. But one thing is can be concluded that if this result season continues the way it is, the question on recovery, earnings recovery, can get answered. So we are seeing signs of that. I'm not concluding on the overall market, but certain sectors and within the sector, certain stocks have already started to give signs of a recovery.
Okay, got it. But Vipul, I mean, banking was one of the consensus overweight theme throughout 2025. So from here, do you see the sector sustaining leadership into 2026?
Yeah, sure. Yeah. So, yes, I mean, if you look at just the credit growth numbers, and finally, after a long time, the credit growth numbers look good. They have been increasing month on month. That is positive, and that is one trigger one should look at in terms of banking as a whole to recover. Of course, partially it is partially because of gold financing, and it is more skewed as we speak. The MSME lending and the gold financing lending is where bulk of the credit growth has happened. But initial pickup to look at it, yes, there is a positive start in terms of a credit growth recovery, and hoping that the incentives which have been passed on to the end consumer will lead to some sort of a growth in the consumption as well. So that all these things, I think auto, gold financing and MSME is where the first round of credit growth has started. I think eventually it should happen. It should be broad based. But as banking overweight as a stance should do very well throughout this year as well.
Okay, got it. But Vipul, how are you reading into the third quarter numbers that has come out by HDFC and ICICI Bank? Of course, it was good numbers for HDFC Bank, but we have seen CD ratio as a major concern for HDFC Bank, and higher provisions have been another key concern point for ICICI Bank itself. But going ahead, how are you seeing this to pan out?
So, see, markets are forward-looking. I think one positive of all these commentary is that most financial institutions have given a good guidance. Financial institutions as well as the tech services, and most of the weightage, if you look at the overall weightage of the market, is skewed towards financials, which is close to 30-35%, and then we have IT services, which is like 10 to 14%. If the guidance continues positive, I think markets will start discounting this quarter earnings and look forward. I think that is where one should look at. Overall, yes, there has been one-offs in most of these businesses, and we should look. It should happen because in certain sectors we'll have a GST-led one-off. You'll have a labor law one-off, and you'll have those provision-led one-off. But if the guidance continues the way it has panned out in the last few days, I think markets will discount these earnings and markets will start looking at visibility going ahead.
Okay, all right. Vipul, what about the metals? I mean, they have been among the best performing sectors recently, but we have seen prices, stocks, all of them, they've already gone sharply higher. Do you believe that the risk reward scenario still remains quite favorable for investors to justify a fresh exposure into the companies?
So one theme which we took all throughout last year was a play on real assets, and I think that is where most portfolios across our families, we looked at it and we saw there is not much allocation to real assets as an allocation, and hence we started with precious metals, and that's where we started allocating to precious metal like gold and silver. Over a period of time, we realized that most metals, many other commodities don't have any allocation to portfolios, and that's where we took a call that real assets and precious metals and metals should merit an allocation in the portfolio. Having said that, these are long cyclical industries. I mean, this is something which we cannot have a long-term view. It'll always be tactical. But the main reason for having this thought was if there is a view on global capex and more countries will look inward and try to be independent and not depend on other countries, the way the geopolitical environment is panning out, most economies will want to be self-sufficient. In that, there'll be forced capex, and if that pans out, most of these commodities will be beneficiaries because there'll be huge demand for these commodities. A simple example: if energy capex has to happen, the demand for copper, the demand for ancillaries to energy will do very well, and that is how we think if this pans out, the demand, the global capex, the demand for energy pans out, there'll be a significant demand for metals which will continue. And hence we think, yes, metals as a theme merits an allocation, but it'll always be a tactical call. It'll never be a long-term call because these are global commodities, these are global prices, and they'll continue to fluctuate and they'll continue to question the thesis. But we think it merits an allocation in our portfolios.
Okay, all right, got it. That's the view for metals. But yes, we were talking about earlier that two main constituents is quite necessary for the markets up move. One is your banks and the other is the IT. How are you reading through the Q3 numbers? Of course, it's a seasonally weak quarter, but we did see that from the past 3 months, the entire sector had seen a bit of a buying interest. Now, post the results, do you expect that the earnings commentary support a sustained recovery in the IT pack, or is it still just a trading bounce going ahead?
Yeah. So one interesting observation during this result we saw in the IT services space is that they have now started reporting their AI-led services separately. So the revenue, of course, it's hardly any today, but they have started reporting their AI-led services revenue separately, which we think will look in which one should start tracking. Of course, today it is marginal, but I think 1 year from now they will have a substantial number of revenue coming from the AI-led services, and that probably should be a trigger for the earnings recovery of this whole sector. And that is something which is an observation we saw in this result, that most businesses are reporting their AI revenues separately. So that is one trigger to watch. I think if this, I think one of the reason why most businesses have given a good guidance, because they are seeing a strong growth in this category, and if this plays out, which we think should, most of the IT services should start reporting good earnings. So yes, they've been gone through a serious consolidation, and both margin pressures as well as top line slowdown. I think if this plays out, I think it will be a phase where the top line grows and they'll be able to maintain the cost as well. So they don't need to incrementally add cost at the same time increase the revenues. So it'll be a decent earning recovery in the whole sector as such.
Decent recovery from IT. But, Vipul, we have talked about a range of sectors, be it metals, banking, or even IT for that matter. Any other sector that you're watching out from the December quarter going ahead?
So autos is one sector which stands out. I think the whole sector, auto and then auto ancillary as well, one sector which stands out in terms of strong growth, strong earnings, strong recovery. Consumption overall is also showing signs of recovery. If you look at the business updates from the whole jewelry sector, there have been strong earnings. The hotels have shown strong growth, strong earnings. So yes, consumer discretionary is one theme. Auto ancillary is one theme. Defense aerospace continues to be a theme. But I think to take a broad base call will be too early. I think we see rolling recovery, and we continue to see rolling recovery across sectors into these businesses. So, but these sectors broadly, these sectors is where we are seeing signs of earning trajectory continuing to trend upwards.
Okay, all right. Vipul, just one last question. I mean, you were talking about earnings recovery remains a little like unhinged as of now, and we can see whether or not this can finally pick up and actually contribute to the Nifty's up move. But any other risk or trigger that you feel that the markets have been underappreciating at this point of time?
So the risk is of, I think, crude prices going higher. That can be one risk. The current geopolitical situation can create that kind of a risk, where the whole crude, which is depressed, prices were depressed all throughout 2025. That can trigger some sort of a issue in terms of recovery, earnings recovery. That can certainly play out. The government borrowing fiscal deficit, how it pans out in the next few weeks, is something we'll have to closely watch as to how government is able to maintain the fiscal deficit and the borrowing calendar, and that is something will trigger how the debt market reacts. That can be negative, but I think I would say from a equity earnings point of view, we already seen a slowdown in earnings, and if the earnings recover, and which are signs of recovery as we speak, that can balance out. So it can so happen that markets remain to consolidate, and you will have individual sectors, individual businesses, doing very well. So that can play out. But these are two important risks we should watch. An immediate risk one should look at in terms of today capital markets.
Okay, got it. All right. All right. On that note, we have to let you go, Vipul. But thank you so much for your time and joining us.
Thank you so much. Thank you, everyone.
All right. If you look at the markets, of course, Sensex and Nifty, both of them have been exhibiting weakness with about 0.5% decline itself. Majority of the sectoral indices have been reeling under pressure. India VIX is clearly bumped up, showcasing that there is uncertainty, which is why the markets have been quite nervous, given that we have also entered the thick of the earnings season for the December quarter by the India Inc. Apart from Nifty FMCG and a little bit of an uptick that came in from the Nifty PSU banks, all of the sectoral indices have been reeling under pressure. If you look at Nifty IT, that has been exhibiting a weakness of about 1% decline, Nifty Media with about 1.5% decline itself, and Nifty Realty also showcasing a decline of nearly 1% itself. So all in all, if you look at the texture of the markets, that remains quite weak as of now. Advanced decline ratio still remains at 1:2. So yes, the markets seems to be a little bit of a directionless, and of course, it's been waiting for further, companies reporting their third quarter results itself. But yes, we'll watch out how the market behaves in the second half of the trading session, and we'll be discussing how the market has developed in the second half itself. But for now, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3 o'clock for closing, and we'll understand how the market has developed with our experts. We'll also discuss some of the individual stocks that have grabbed the headline. But until then, signing off, and do stay tuned to Money Control.